and a lot of people are now might get into it, might invest I don't know how much, like all their savings, everything into it, and then lose a lot.
Mhm.
Talk a bit about that, the losing, because you're not gonna win every time. Talk a bit about the losing aspect to it.
Yeah, losing is a big part of investment, and it'll build you a spine when it comes to trading, investing long term. Losing long term, I'd say if you're someone who wants to look into long term investments, it's gonna be less of an emotional roller coaster because yes, things will go down, but because it's such a long period of time, chances are they'll go up. For example, TD, I believe, is the only bank that survived the recession in 2008. And so their stock, hey, by the way, long-term investment, they look like a good, and this is again, I'm not going to tell you to invest in it, but it looks like a really consistent, bang for your buck kind of stock. And in the beginning of COVID, it plummeted. Like it just dropped an insane amount that we haven't seen in a long time. And people were like, wow, I guess we can't even trust them. But look, a year later, they're back exactly where they were, right? So if you're a long-term investor, get used to seeing yourself in the negatives, but it might not that. But again, if you're not relying on that money for something, it's not going to affect you too much. Now, if you're going into like day trading and stuff, this is where the losses are going to really build kind of your confidence. A lot of people will be driven out. Most investors actually probably do lose because they don't have any knowledge and they go into it and they just completely just it's a gambling, right? So I'd say if you're a beginner investor, beginner day trader, identify obviously what your risk tolerance is. Losing is an important part of this because I had big losses for sure in the beginning, and that's kind of built me to have I guess, the tough skin, right, when it comes to this, to make decisions that are completely emotionless. You have to look at things like almost like a robot. That's what you want to become when it comes to investing because the market is going to play with your feelings.
Yeah.
Yeah.
Yeah, because I was just talking to my boy about it, and because we were all on this NBA fantasy app. So you know how fantasy apps works. It's like a
Yeah, yeah,
sport thing, and the big thing is you're betting on a player delivering the value that he has when you got him, or even his value shooting up when you
yeah.
have him. And what you have when you at the beginning of fantasy you draft your players or whatever, and the higher you draft, that means the more you spent on that player technically, because if he doesn't deliver its value, then
Yeah.
you're screwed. So what I've noticed, especially in our fantasy league, is that a lot of people, like, they draft a certain player and he has that high initial value, but as soon as his value dips, they cut their losses and then they drop their player to waivers, and then somebody else smart, I'm not gonna say who, but me, picks up that
Yeah.
player, from waivers, because you know how to you differentiate a slump in terms, you differentiate the slump from an actual bust. So you're
Mm.
like, okay, I know this player's his stock is going to rise eventually, and then boom, I got this player for almost nothing because everybody dropped him to waiver. He had zero value. I picked him up for nothing, and now his stock is rising, and now I'm making bang from it. So I think it's interesting to see how people's personality comes into play, because some guys are like, I'm gonna ride this wave. It might go down, might go up, but
Mhm.
I'll ride this wave. But a lot of people are more like, it's going down, I'm out of here.
That's an important point because fear will actually there's a famous quote. It's like fear kills more dreams than failure ever could. And that applies into real life when someone is not open to taking new opportunities that could help them excel. But that also applies to investing because a scared they say scared money don't make money, right? It's kind of true. Like you have to be willing to take the losses to have the wins. Obviously, there's a lot more that goes into it, like analysis of the charts. I looked into the analysis behind all Nokia, AMC, GameStop, BlackBerry as well, and I was like, maybe I would say I'm looking at the volumes and how this can work. I do see it going up. I don't know exactly how much because they're expecting something that's never happened. But to some degree, you can kind of expect where it'll go. And so it was already really high. And I'm like, okay, well, because of how the chart looks, this will have a huge retracement, which in the investment world just means you're going to have something that it just drops back down a little bit. And the day I bought is when I think GameStop went down like 40%. AMC AMC went from like 5 to like 20, then it dropped to like 8 or something. And so I got in at the dip. And when you have knowledge, those are things that are really profitable because I know I'm gonna have some decent return on that,
Yeah.
regardless of whether it shoots to like the moon, is what they're saying, right? So
Mhm.
I know in a short term, like pump and dump, yeah, I could put money in low and I'll see some decent return. But that's because of all the experience that I've had. And I'd
Mhm.
say if you're just starting off, that's why it's so important. Don't invest real money until you are actually like really confident and you have a proper background. But again,
Mhm.
that's when I tie into free education is good, but everyone out there is trying to sell something straight up. I've seen some
Yeah.
really crazy people trying
Mhm.
to overprice and sell really weird things for trading and take advantage of people that don't know. So make sure that what you partner with is credible. Or if you're looking into buying a course, do it, but make sure the person is actually like a legit person. Because
Mhm.
yeah, I've seen way too many people just buy anything because of hype. Like a lot of people, I guarantee right now, are gonna buy a course from a random guy, or like they'll pay for some random thing that no one knows about just because they're like, oh, I want to make money because of this hype that's happening.
Yeah.
So they think
Mhm.
they're doing the right thing, which in theory they are, but they're doing it with the wrong person or whatever.
Mhm.
So just be really careful. Like just be really careful.
Yeah. And I was wondering if you could answer this question. Why does it seem like every time there's like the worst financial crisis, the rich people are getting richer and the regular folks getting getting poorer, quote unquote.
Yeah, and I'll tell you exactly why, because they just know things that average people don't. Like when things like this happen, they see it as opportunity.
Mm-hmm.
So when you hear financial crisis, they're thinking financial opportunity.
Mm-hmm.
Isn't it crazy how
Mm-hmm.
that works? Because they know
Yeah.
exactly what's going to happen. Hey, look, before COVID happened, I don't know if maybe you covered this, but all the CEOs that stepped down at one point last year, like a year and a bit ago, there was a whole
I need to
bunch of
cover that.
there was like the top 500 companies, top 100, a whole
Mm-hmm.
bunch of the CEOs stepped down, including Bill Gates was probably like the biggest one.
Mm-hmm.
Like he kind of like he just stepped down, took a lesser role, and everyone's like, why are they doing that? Like, and then
Mm-hmm.
look what happened.
Mm-hmm.
Virus. They knew we were gonna go down. They're like, it's not in my best interest to go through that, or like it's gonna be too whatever, like their own decision. But I'd
Mm-hmm.
say, for example, if you like, I did a TikTok, and it was like, and I've seen you on the reels too. It's good. You're taking, like the
Yeah,
TikTok and the
yeah,
really good. Um, if you have $100 to invest only, invest it in books,
yeah.
because the
Mm-hmm.
knowledge that you gain over time, like that's knowledge that you'll always have and no one can take away from you. A hundred
Mm-hmm.
dollars investment, I'm sorry, it's not going to make you a lot of money unless you caught
Mm-hmm.
Bitcoin in 2008.
Yeah,
Right now, you'd be chilling, you'd be multi-millionaire. But I'm saying, like, if that's the case, and by the way, Dogecoin is a
to
funny one because
to the
everyone's like,
moon.
oh, yeah, the next Bitcoin kind of thing. I personally don't think so.
Mm-hmm.
Hey, if you have money to lose, then go for it and see if you can get something. Because I think the other day it was like 400% return in one day, but then
Mm-hmm.
it dropped back down the exact amount. So fast movements. But my point is educate yourself, because again, that's something that no one can take away from you. Find some good books. Think and Grow Rich is a good one. The Intelligent Investor is a good one. Obviously, Rich Dad Poor Dad. These are just my recommendations to kind of get yourself in the headspace of financial literacy and what it means.